What is the key message, and how do we think about coming back from, for many people and many businesses, a holiday season, perhaps a moment of reflection? Where are we in terms of the global outlook for this year? Are the assumptions that perhaps were put into budgets late last year still accurate? Are there any changes? And how do we think about those? And I will start with opportunities because this year, while a lot of the talk is about recession, it's not all bad news. And I think it's important to have a good sense of where some of that upside might be coming from and how to take advantage of that. Here we've given just a couple of examples, and we'll keep coming back to them, but from a geographic perspective, we still see some meaningful upside opportunity in, for example, India and parts of Southeast Asia. Indonesia stands out as an example. Across the GCC markets, especially oil exporting markets, will continue to benefit from the high energy prices, and we'll talk about that in a little bit. Across sub-Saharan Africa, there's still definitely pockets of opportunity and growth. Again, one highlight here would be Kenya, but it's not the only market that is growing strongly in that region. And then in LATAM, we know Mexico, Colombia, both on the radar for companies, particularly Mexico from an investment perspective as well. And maybe China. We wrote this first with a question mark, and then we took the question mark off. And we'll talk a little bit about what China's reopening means and how that affects both the outlook for that market and also for the global economy in 2023. From a sectoral perspective, and again, there's a lot more to touch on here, which we won't be going into today, but I think it's clear that energy security, the continuity of energy sources, and also demand for all sorts of energy sources as we have them today is still very hot on the agenda. So investments going into both renewables as well as more traditional hydrocarbon energy sources are going to be significant. There's a very tense still geopolitical situation with the war in Ukraine, with US-China tensions that are driving additional investment into defense spending. And we think this is a longer term trend as well, but certainly one represented in 2023 budgets. There's some resilience in consumers, and we'll talk about that later, but that also creates opportunities both in the premium and super premium segments, and there might be even a little bit of an upside in the mid segment, but we'll have to discuss a little bit more of what that looks like, especially in the second half of the year as we go through our conversation. So the consumer outlook is challenging, but not all negative. We also know that a lot of businesses are facing significant input costs, and in many cases, they've been able to push through that onto their pricing and to their customers. The big question looming over this year is, at what point does this game of musical chairs stop? Someone somewhere is unwilling or unable to pay that price premium, and what does that do back into the value chain as well? Broadly, though, we also see that businesses are looking to optimize their costs, and so any services or solutions or technologies that allow input cost savings, greater efficiency, certainly this is the year to be bringing those to customers across the B2B space. And we also have a relatively positive outlook for travel, global travel and tourism, even though, of course, the weaker global growth will have an impact on it. We're still in a period of compensating for several years of lockdown, and we expect some Chinese tourists to start traveling as well. So all of that gives us some confidence in terms of a relatively healthy outlook for the global tourism sector. Big open questions, things that I think should be kind of on the discussions of senior executives, and also ones that don't have very clear answers yet. First is the perennial issue around price sensitivity. Last year, we saw businesses pushing through significant price increases. In many cases, budget discussions for this year were about the extent to which this can be sustained, the point at which customers really start to push back, and maybe that's okay. And maybe we actually we still want to protect margins even if we lose some customers. But this question of how long and how big price increases can we sustain for, and is this the year when it starts to really backfire on us, is still looming over a lot of executive discussions that we're seeing. It's an unprecedented situation from a global macro perspective, so it's hard to use normal historical behaviors to fully inform that. But we know that this is something that companies are really trying to get the real data on at this point. Second is a question we will attempt to answer, which is around the likelihood of a slightly faster return to growth than may be expected, and what does that mean in terms of demand, but also does that drive up inflation again as we see a little bit more aggressive demand? Longer term, does that entrench higher for longer inflation, and what does that mean for business models overall? Some of the long-term implications of this, I think, will only become clear towards the middle to second half of the year, but it's certainly something to reflect on. And then a big question that we're thinking about here at Frontier View as well is around the ripple effects of high credit costs onto governments, onto businesses, and onto consumers, whether that's reflected through housing market impact, whether that is about sustainability of distributors and how long can they deal with those types of high credit costs, whether that means governments have to make difficult choices about the spending that they do. We know that this higher interest rate environment is new for the last 10 to 20 years, and that adjustment period is not over yet. We've only seen the beginning of that process. So some food for thought, but also some actions we wanted to suggest before we go and ask the audience a couple of poly questions. First, I think what is clear from this picture, and we'll go into sort of the data and the analysis behind these recommendations, is first, segmentation of customers, I think, still a really important exercise, especially if you're trying to really refine your thinking around profitability, if you're trying to be a little bit more selective in terms of what you can do on pricing, really understanding what are the segments that can really sustain higher margins and potentially more profitable product lines is where the focus should be for this year, because there will be some price sensitivity across a range of segments in the B2B and in the consumer space, and also among some governments too. Second, I mentioned already that there's significant pressure on credit costs. And that is starting to, in some cases, already has hit distributors, dealers, retailers on the ground, other types of third-party channels that multinationals we work with are selling through. This might be a moment where some of them do something strategic. It may be a moment where they go bankrupt, in the extreme case. So we know that this is going to have an impact on them, especially if they're already having challenges with working capital, or they're sitting on a lot of inventory, or there are any other issues that they haven't been able to tackle in easier times. The high credit cost environment is going to put a lot of pressure on those partners, and it's important for you to get ahead of that as much as possible. Maybe this is an opportunity to look at, is this the right route to market structure? Is this the right partner? And if so, how can we commit to them and support them? Is it a moment for a channel transition? This is an environment that will push for those types of strategic discussions and decisions. Similarly, because of the credit cost challenges, we think that some B2B customers, in some cases governments, but I guess they can push their way around in terms of payment delays, they're going to be looking for ways to reduce upfront cost commitments. And so any models that allow you to either extend credit or to actually just give them more flexible payment options are going to be important to consider in this context. Pricing is a question that is still, again, a big open challenge for a lot of companies, partly because the demand curve and the price elasticity is a little bit unclear for a lot of different customer segments on the consumer and on the B2B side as well. And so gathering that data and being able to quickly react, some of the skills that companies gained during COVID actually would be particularly important right now, because a German consumer today might look and behave differently than a German consumer 3 months from now. And having that real-time data is going to be really helpful for navigating this environment.
Hi, my name is Krista Reganey, and I'm the Marketing Director here at Frontier View. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.